The transactions are identified in the annual reports published by the Private Equity Monitor, PEM, which takes into consideration only the new investments made by institutional investors in private capital risk, in all phases subsequent to those of business startup, thus excluding investments made by public or parapublic operators, venture capital operations and reinvestments in companies owned by the same operator, the so-called follow-on. Point 83 with reference to each company in the sample. A series of information and indicators were acquired which made it possible to carry out an analysis on two levels: qualitative, framing the phenomenon in question at a temporal, geographical and sectorial level; quantitative, through budget, financial, performance and employment indicators. More specifically, to study the economic impact of private equity on target SMEs, income indicators, EBITDA and net profit, and dimensional indicators, revenues, employees and total assets, will be examined. The data of the companies were obtained through the IDA, Bureau van Dijk database, containing the financial statements, personal and product data of all active and bankrupt Italian joint stock companies, excluding banks, insurance companies and public entities. The results of the study will then be expressed in terms of CAGR, compound annual growth rate, which measures the annual growth of a particular indicator over a specific period of time. In this regard, the three annual financial statements before and after the date of the investment will be taken into consideration. The choice of the 4 years to be analyzed is also guided by the limits of the aforementioned database, which does not allow to access data prior to 2010. First of all, the analysis will focus on comparison with several reference benchmarks, to understand if and to what extent the results provided by the sample differ from the results recorded for companies that are not owned by private equity funds. In particular, the benchmarks taken into consideration are three: macroeconomic indicators, such as national GDP and employment rate, Mediobanca Union Camera Research, which presents the annual results of Italian industrial SMEs between 2008 and 2018, and data provided by ISTAT, National Statistical Institute, which provides the economic annual results of Italian companies. Subsequently, the data collected will be used to carry out several analyses on the sample, including a comparison of targets' performance in the 3 years before and after the investment, in order to have a complete picture of the type and extent of the impact provided by private equity operators. In this way it will also be possible to understand if this impact is significant or if similar growth rates were recorded even before the investment, therefore attributing to the operator the ability to select specific companies that record higher returns and growth rates than others, in order not to modify the previous trends of acquired companies and helping to maintain or even accelerate the performance of already growing companies. For a better overview of the phenomenon investigated below, a description of the morphology of the sample identified is mandatory. Furthermore, for some of the transactions covered by the experiment, it was not possible to retrieve the data on the financial statements from the IDA database because of their absence or incompleteness. After this first screening, the sample amounts to 152 companies. Since the objective of the paper is to analyze the performance of small and medium-sized enterprises, the second exclusion to be made is that of large companies. Companies that employ more than 250 people, have a turnover of more than 50 million euros and have an annual balance sheet total of more than 43 million euros, were therefore excluded. In addition to this, it was also considered appropriate to exclude transactions characterized by a secondary buyout deal, referring to transactions involving the sale of a portfolio company by one financial sponsor or private equity firm to another 85. The main reason is that, since the control of the company is already in the hand of a private equity or venture capital investor, it is not possible to analyze the impact due to the intervention of an investor who acquires the company, or part of it, from a private owner. After necessarily excluding these two types of elements, the total number of companies decreased to 107, representing the complete sample that will be analyzed during the chapter. The graph below shows the number of transactions analyzed for each of the years taken into consideration. The number of investments in the sample is fairly homogeneous for each year, and slightly growing, resuming the trend of constant annual growth of total private equity investments at Italian level. Analyzing the sample from a sectorial point of view, in graph 22, it is shown how the investments under analysis are broken down, adopting the standard industrial classification, which is the reference sector classification in the international context. In particular, 33.6% of the small and medium-sized enterprises in the sample operate in the industrial products sector. Following this, with a percentage equal to 21.5% of the total, are the companies belonging to the consumer goods sector, while the third most invested sector is that relating to food and beverage with a percentage of 15.9%. Another important and deserving aspect of further study is the one relating to the amount of share capital through which the investor enters the shareholding structure of the target company. In graph it is possible to visualize this aspect, specifying that the individual punctual data have been distributed by significant intervals, companies in the sample distributed by share acquired by the investor. The operations of the sample are increasingly distributed. In particular, 7.5% of the sample acquired shares not exceeding 25%, 21.5% shares between 26% and 50%, 31.8% shares between 51% and 75%, lastly 39.3% shares ranging between 76% and 100%. Consistently with the types of transactions taken into consideration, i.e., buyouts and growth capital, most operations are characterized by the acquisition of a majority stake by the private equity investor. The last qualitative feature worth analyzing is the regional distribution of investments within the sample. From graph 25, shown below, we observe how the great majority of the investments taken into consideration were made in targets located mostly in northern Italy, in particular in Lombardia, where the number of companies is also very high compared to other regions. In terms of performance, it was deemed appropriate to immediately frame the impact of private equity investments, showing the distribution of the companies contained in the sample by CAGR of the main analyzed indicators. Graph 26 shows the distribution of the companies contained in the sample by dimensional indicators CAGR, thus involving revenues, total assets, and employment. Important information regarding the distribution of the sample is obtained from the above-mentioned graph. In fact, as we have already observed in Chapter 3 from a similar study drawn up by Francesco Bellazzi, for all three indicators, a part of the companies within the sample shows negative annual growth in the 3 years following the investment. The majority, on the other hand, has a growth ranging from 0% to 10%, while the companies that have a growth of more than 60% are less than 4% of the sample.